What's good, y'all? It's your boy China Investing back here with another video on the daily NQ and ES review. All right, so we're just gonna be using ICT concepts to establish daily bias, go through all the time frames, and then we're gonna go over specific 22 models that happen throughout the day, which ones you should have taken and which ones you should have, right? Depending on the various time frames. So this is a series that we're doing now daily on this channel where we'll be going over NQ and ES. So make sure you subscribe so you don't miss a single video, so that every single day you can understand what the next day's bias is, right? And I'll be helping walking through that, as well as going over specific examples of the 22 model that shows up every single day, why you shouldn't take it one day, why you shouldn't take it a certain day, or why you should, what are the best time frames, what times of day were best for it to occur and why, what PD arrays were important to understand, etc. So this is like a really helpful how-to guide. ICT, I learned this all from ICT over the past several months, about 15 months now. I've been under his tutelage, and I noticed he doesn't post every single day, so he's not gonna be able to walk you through bias every single day. But on this channel, you can come and watch me, and I'll be talking about what I've learned from him, and I'll be talking about what I'm seeing on the charts every single day. So I won't miss a day here. And so this is Wednesday, October 30th stream, and let's just go over what happened today on the ES and NQ, but primarily NQ, and then we'll use ES supplementary because that's why I focus on trading. A lot of times it moves faster, and I feel like it's just easier, profitable making opportunities here. But ES just tends to move a little bit too sluggishly for me. But if there's a really good trade on ES, I'll take it as well. So if we see something really good on ES, I'll point it out. But I think actually this day today was actually a really good day for ES. It actually moved stronger than NQ, so we'll go over like also why would I take a trade on NQ versus ES. But if all that sounds interesting, press that like button because I'm not asking for any payment. This is just free knowledge I'm putting out here on YouTube. I'm gonna be going live soon once I hit a couple thousand more subscribers, and we'll actually be taking live executions together. Obviously none of this is financial advice, by the way, at all. This is just me going over what I've seen. All right, without further ado, let's get into it. Press that like button. Also, press that subscribe button. You can subscribe too. Subscribing is great. And press that notification bell so you don't miss a single video as we go over this every single day. All right, it's very important for you to stay in tune. So what do we have on the daily candle? All right, so daily candle, we moved higher. We took out the previous day's high, right? And then we came down and took out the previous, we failed to take out the previous day low. But, and where are we right now in terms of high time frame? We are in this daily SIBI right here. That's these two red candles. These two other light reddish candles right here is a weekly SIBI. So we're now in a daily SIBI that's nested a little bit in and a little bit out of the weekly SIBI as well. So you can see there's a lot of chop, right? Look at how much price freely moved when we were not in this area. But once we got to this area, we're chopping a lot. As if you notice over the past month, right? October has been a pretty tough month for pretty much a lot of ICT traders, and that's just because we're inside this weekly SIBI and daily SIBI, and like its price is very finicky. It's hard for it to move, very cleanly. When we're in these kind of higher time frame conditions, especially with election season coming up as well. In October is supposed to be a month. At the end of the month, we're supposed to be dropping, but we're also rising because of the election season, and so there's a lot of back and forth. Basically, it's not a very clear bias higher time frame what's going on here. So you've been seeing its prices going up. It's respecting premium arrays, but it's also coming down respecting discount arrays. So what do we see today? We see us from yesterday's candle would have liked, since we closed above the CE of the daily SIBI right here with a lot of speed and magnitude, I would have liked to see the next candle expand higher to give confirmation that we were going to go higher. But like I've mentioned on this channel before, if we close through a SIBI CE, right, and the next candle comes back in, the next very candle comes back in, then we're it's not very likely that we're leaving that SIBI yet. We're still respecting it, right? And honestly, we could even be bearish. And I'm recording this on October 31st, and if you're looking at October 31st daily candle, you'll actually see that the next candle is a very large candle downwards. So that's just something that I've observed from my own logging. So that's definitely a note I would take. But we see, on a candle like this, when you see something like this happening and you're close to the daily SIBI, what you should be asking yourself the next day is, all right, it's either going to be an expansion day higher, or we're just going to fall, or we're going to come back down below the SIBI right here. Or we could have like a doji candle that could come back here, but then that also would be, a sign that, okay, we're probably going to come back lower too, because if we really are bullish, think about it, like, we're going to close to the SIBI CE and we should just see expansion higher. We shouldn't see any playing around. We should just go higher, but we're not, right? Because we're stuck in all these higher time frames, and given the election season, like a lot of people are not sure whether or not they should be bullish or bearish, right? So that's the logic behind this daily candle here. So keeping that in mind, we did rise higher, overnight here. This new daily candle started around 4:59 p.m., 5 p.m. and then we came back lower in the day on the 4 hour. So what do we have here? We have these 4 hour BISIs, right, that we ended up filling in throughout the entire day after taking these relatively equal highs yesterday. And also taking all this all this liquidity over here has now been purged. There's now liquidity below this low, right, and below this low as well, and this previously week low. Because I mean, look at all the liquidity we've taken out on the high on the buy side. Now there's liquidity here on the lower end of the chart. So that's the stuff that we should be eyeing, especially if price is not showing a superior willingness to go higher. So what do we have? We have this bearish order block at this extreme premium level, and we respect that with the next candle. So we're now respecting. We're not in MMSM because we're respecting premium arrays, right? Where price is making bearish order blocks. This is now a propulsion block because this is the second bearish order block that reacted off the first one. And you see, when you see a propulsion block, it should come back up and have an immediate rebalance, but should be really sensitive around this area and come back lower. And so we saw, we traded through the CE of the consequent encroachment of this 4 hour wick right here, and then came out and took out this low, and now creating an order block on this area as well. And so, by the way, this level is just equilibrium of this move to here. You can see we came back into that, tapped it again, and then went lower. This level right here, I believe, is actually a daily fair value gap. So on the daily, we had a fair value gap form right here between this high and this low, and actually this is the volume imbalance right here between here and here. So that's going to be included inside the daily fair value gap. I talked about this yesterday as well, and so you can see we came back into that today on the 4 hour, respecting the top of it. You can see how we close on the top of this daily fair value gap. This proves to you that these PD arrays are relevant, right? And if we're closing on this on a 4 hour, imagine how this is going to be respected on the 1 minute, 5 minute, 15 minute, right? Like, these are very sensitive levels. So the 4 hour, we close on top of that for the day. In the PM session, what do we have on the 1 hour? 1 hour, right? So overnight, we crippled higher. During Asian, we did not move much. We created this fair value gap right here that we came back into in London, had a reversal profile in London, reversing the bearish move, and then continuing lower. And then what do we see in New York? We see in New York, we open up. We also, we have a New York continuation of that move. So when you see London, like how can you know this is going to be a bearish day, right? Like you see London come back into this premium array, and we respect it. Right, so we have a classic London reversal, right, but then continuation lower, and then a New York continuation of that London reversal move, right, and we come down lower, right. So if you see London is retracing, and then we respect the premium array, and we just continue heading lower, right, and the daily candle has a bias where it could be bearish. Like this could likely just be a bearish day, right, where New York is just going to continue that move. And so in New York, what do we see? Right, so London in the 2 a.m. candle, we came back into this 1 hour fair value gap. We didn't close to the consequent encroachment of it with decisiveness. You see here what I was talking about. The same thing on the daily. Look here. On the daily, like we had that profile where we closed through the CBCE, right? But then the next candle is either a reversal or it's a doji. So we had a doji candle here, which is really a mohawk, and then we come back and expand down through. So this shows you that we're still respecting this 1 hour fair value gap. Come back and we're playing around the low about it for a little bit. We expand away, come back and tap the low one more time. Then we form a fair value gap. This is an 8 a.m. fair value gap, right? And at 10 a.m. when we open up, I believe it's the 9:30 open, we come back and we fill this. We tap the bottom half of this 1 hour fair value gap right here. Just come short of the consequent encroachment that's showing weakness, right? And then we reject away, and we're also on a thinking about a bearish day. So now you should have double confirmation. This is probably just going to be a very bearish day, right? Even though we came back into this 1 hour BISI and rejected higher because of what we had in London, because of the daily profile, we're actually bearish, and so we end up continuing going lower. Here's something else that I wanted to show you guys that also could give you confirmation that we were bearish. So look at ES, and this is why I say ES is good to supplement. Look at ES, right? So ES, we did not take out this high on Friday with this high, right? But on NQ, we did. So what do we have? We have bearish SMT. So all day, the 4 hour candles are just printing bearish, right? Think about what SMT is. Like when you see an SMT, the next couple of candles, no matter what time frame you see, like the next 5 to 10 candles are going to be like going in that direction of whatever the bias is telling you. So on the 4 hour, if you're thinking we have 4 hour bearish SMT, like you should be focused on bearishness, right? It would be a six sister if we have real confidence that price is going to continue to expand higher, and maybe like NQ is just expanding higher and ES is going to catch up. But no, like we have a tail signs, right, that price is respecting premium array. So like you should know that this SMT is pretty valid, right? And so price starts reversing, and then you know, around 11 a.m. yada, we continue lower. Lunch, we had a down candle, and then we headed lower for the rest of the PM all the way to that daily fair value gap and closing in this 1 hour fair value gap. All right, and returning to this rejection block over here, not even touching the consequent encroachment of this daily fair value gap. On the 15-minute, last of my chart, let me just clean it up a little bit. All right, let's close equilibrium. Actually, let's keep that there for a second, because you can see that price is still interacting with its equilibrium level right here, right? And look over here, we're still tapping it, right? So it's a PDRA as well, equilibrium. So what have been going into the AM, right? Pretty weird on 15-minute. You can see that we had London and Asian highs, right? I personally was looking for that to get taken out and to trade. This is the opening range gap as well, right here. We're below the 8:30 and 12 a.m. line. I was expecting price to come back up here and touch this opening range gap CE at the very minimum. And also, if you see ES, we actually took out the London high right here, right, as well. So I would have thought, okay, at least we can maybe take out the London high, but that's really SMT, right? Like we failed to take out the London high, and we're showing bearish price action, and we're not even feeling the half of this ORGCE. Like this is telling you that, look, we're in the bottom half of this ORG and we're expanding away. All right, we just keep coming lower. Like that should tell you, at least in the PM now, that when you're trading, like we are bearish. We're bearish for the day, right? And you have these two like relatively equal lows right here to attack as well in the PM. So let's just start from here. So overnight Asian, we come back, and that's the 1 hour fair value gap here that we were talking about before. But you can see there's several stacked CIBs out here on the 15-minute. I believe this is a new day opening gap right here. So we're hovering around that. This level all throughout London. We're respecting premium arrays. We come down and start falling. And I believe the 9:30 candles are here. Right. So we start falling, coming into 9:30. And then we touch that 1 hour fair value gap. That's what you saw before. And then we reverse higher, creating a 15-minute BISI with no break of market structure. But let me show you something on ES. We did have a break of market structure right here. With that particular move. So this would look like a good 22 model, right, to go higher, but you have to keep in mind higher time frame context, right? Like this could have looked good to go higher, but really we had that 4 hour SMT. That's why it's really, really important to keep this higher time frame levels in mind, because these lower time frame levels are going to move in sync with what the higher time frame levels are doing. So we go higher, we get to this 15-minute fair value gap that's nested inside like this ORG level, right? We reject from it and invert this 15-minute BISI, but then we come back higher, invert this BPR. Like, there's a lot of, choppiness. Like, this is what happens like when when election season is about to come up. We're also in this daily SIBI and weekly SIBI. Like price action is just not going to move as cleanly, and which is why like you want to lower your risk when you're in environments like this. And not really try to overtrade. Like take 1 to 2 trades a day. If it's not going in your favor, like these are environments where you can lose a lot of money very quickly and blow your accounts, right? There are going to be environments where you see PDRAs being respected very well, and that is like when you want to be like going max risk. That's when you want to be taking the most trades in a day and really, really try to build up your account, so that when you come to times like this, like you see a little bit of erosion, you've already made all the money you need for that month or that year, right? Okay, so we come back down here. We come back into that opening range gap around 10:15 a.m. Come back down, touch the equilibrium, rise higher, invert that 11:15, and then 11:30 onwards, just to start trickling lower, right? And then taking out the 9:30 low as well as this 11:15 low right here. Going into the PM session. So what happened during lunch? Actually, lunch we just continued lower as well. After having a pretty choppy AM, we just continued lower after we reversed into that range during lunch, and then came to tap this daily CE, came back higher. Just want to actually look at the time frame. So like 1 o'clock, we just kept going lower. We left this low right here, and then we came back and touched this equilibrium level a couple times in the 15-minute, and then we went lower going into the 3 p.m. macro. Spiked higher to this redelivered rebalance price range right here, and went lower and just kind of hovered around for the rest of the PM session. Let's go in the 5-minute real quick. 5-minute, very similar price action. Just study that for a second. Right, we come here, we have this wick at 8:10 a.m. in the SIBI, go lower. See how we come into this 5-minute SIBI constant encroachment, but then we on the next candle reject away immediately, right? So if we were really bullish and reversing, I would want, and plus there's a 5-minute BISI over here, that's what that was. So if we were really going to go higher and take out some of these LRRs, like I would want to see this next candle right here expand up and not come back down. So it came back down. You can see that we're still bearish right after. And then price comes back down into that 1 hour BIST, that level around 9:40 a.m. We've now let this whole opening range gap open. We reverse to it, at least touch the low, right? And then we come back. We don't make it to the opening range gap CE. Reverse lower. Just pretty much chopping around. Starting from like 10:30 all the way until here in the 12 macro, 11:50 to 12 p.m. macro, we start going lower. Respect this 5-minute BIST up here, reject higher, touch the opening range gap low, fall lower, hit the daily CBCE, gyrate around for a little bit, come back lower, breaking market structure after taking out this high right here. I believe that should be a little takeout right here. So this could have been a valid 5-minute 22 model right here. Let's just pause for a second. Now we're also talking about 22 models, right? We took out this high right here. Remember what I told you? If you have not, like, I don't think I went over 22 model at the beginning of this episode. But let's actually go over 22 model real quick. So 22 model, right? Make a high, low, higher high, right? This is really a break of market structure. Sorry, excuse me. I don't know what I'm on today. This is 22 model, right? Make a high, take out this liquidity right here, break out market structure right there, return back to a fair value gap, and then we bounce higher, right? So the same can be said vice versa. So a 22 model that is bearish would look like this. Make a low, take out this high right here, make a lower low to this low, breaking market structure, and coming back into this fair value gap, right? And going lower. Now, typically 22 model, a lot of people will talk about it as a reversal strategy, but it can also be a continuation. So this is a very good example of how 22 model can be a continuation. So you see we have this high right here, low right here. Then this high takes out this high, right? And what time of day is this, right? We're coming into the 250 to 310 macro, right? So we gyrated a little bit, and then you see this very clear. We're already bearish from higher time frames. I told you we haven't touched, like, the reason why this can be trusted is because we have not touched this opening, like we have not touched the opening range gap CE. We're showing a clear willingness not to fill that in, right? We've closed well below this equilibrium level. We had that 4-hour SMT, right? And we also had 15-minute SMT as well, where we failed to take out London as well, but ES did, and then we started heading lower. So everything is screaming bearishness, right? And we have these two lows here to attack, right? Right here and right here, relatively equal lows. And there's liquidity down below here, plus it's a daily fair value gap that we can target as well, right? So this is a very valid 5-minute, 22 model. We have this high right here, this low, and we have this high, right? Which takes out this high. That's that purge liquidity that I talked about. Then you have a break of market structure right here, where we took out this low and we leave a fair value gap, right? We actually leave two, and we come back and we retrace into that fair value gap, right? We leave this one open up here because of this breaker to the left. So let me actually show you. Take a look at that breaker, right? We have this breaker right here. We still have all these relatively equal lows. We come back up here into this 5-minute fair value gap. And you see we're closing on the consequent encroachment. We're closing on the consequent encroachment of this 5-minute SIBI. Very good. And we have an immediate, bearish order block reaction right here. This could be a second entry right here if you're going to pyramid, and you can move your stop to above here, because now that we've expanded away, like, we really should not be coming back up into this range, right? If it's a really good 22 model and you're really bearish and you have this clear draw on liquidity below here, right? And so we have that 22 model form. Where would be your entry? Your entry is going to be on the high of this fair value gap, and your stop can be right above the breaker, right? Because you have this fair value gap right here, you have this breaker, and you have this bullish, or you have this bearish order block right here, this whole move right here, this bearish order block. Like, that's 3 PD arrays, right? 3 PD arrays where we should not be going through. And Tanya Trace talks about that 3 PD arrays a lot. You got that from ICT. I like talking about that. I like that because it just helps you to tighten your stop. You don't need to wait for the high. Like, if you have 3 PD arrays that are in the way, it should not go through it. And so you see, we come back at that fair value gap, and I aim for a 1 to 3, right? And that is a nice 1 to 3 right there. Now, sometimes it doesn't get to your 1 to 3. I like to get to, especially if you have a prop firm that has a trailing stop out. Like, see on this candle was low right here, around 50% of my target. I would have taken out at least half the trade. So at least I'm making a 1 to 2 on the full trade. Right, so I aim for 1 to 3, so I can make a 1 to 2, and it gives me a really good partial strategy. Now, let's say, for example, this didn't go in my favor. What would I have done? Once we close through this consequent encroachment, right? If we close through that and the next candle is like an expansion, I mean, let's say we close above the CE of this breaker right here as well, I would have gotten on the trade. That's too many bearish things. When a really good 22 model will like really just respect this first fair value gap, it can tap this one, but it shouldn't really close above the consequent encroachment of this, or the second candle shouldn't really close above it. Like, you want to see like really obvious bearish price action. Like, if you're not seeing that, like, it's likely going to be a stop out. And that's why, you just like pull out early. And so that way you're really risking like half your trade. So really you're making like a 1 to 4, if that kind of makes sense, right? Like, you should only be losing, let's say you're risking $500, you should really be losing like $250 most on your trades, because if it closes above the CE of the fair value gap with expansion and the next candle is not expanding away, like, you need to be pulling out of that trade. And that's how I get out early, but I would have kept it in because we didn't really decisively close above this candle, and we still have this SIBI up here that we can draw to, and we have this the 50% of this breaker. Like, if we had closed above that, that would be where I would get out. We go down here. Once we close below here, set your stop up here, right? You come back lower. We do like trade like, but no, this candle would have hit your take profit out by the time that it went above this SIBI right here. But once we close above this SIBI, like, yeah, I probably would have closed my trade, but you can see that we would have hit our take profit already, right? Sometimes you're not going to get the the cleanest like exits, but that's just something to observe. All right, so that is the 5 minute. Let's just see if there's anything interesting on the 1 minute. Let's just start from 9:30 on the 1 minute. Or we can start from 8:30 over here. All right, so 8:30, you see we come back lower, we take out a short-term high, and then we have this fair value gap form. It closes through this weekly high level, I believe, and we just continue going lower, leaving this fair value gap open. So now we're pretty bearish. We have this 2 new fair value gaps coming. We come up and we close through this first one, but it's because we have this one up here, which we don't even get to, and then price goes lower, taps the bottom of this fair value gap SIBI, reaches this 5 minute BISI, and then we are just kind of consolidating until the 9:30 high, to the 9:30 open. 9:30 we start basically tanking lower, come down to the daily SIBI CE, kind of just go up higher towards the opening range gap CE. Now here, because we had this opening range gap open and we had all these LRRs and we're in such a deep discount, I would have been looking for a bit of longs if I got a decent break of market structure here. Now this is an opportunity where you can actually trade ES, because in ES, we actually had a pretty good break of market structure right about here, right? And we had London and Asian highs that we have targeted, plus the ORGCE that I could have expected. I would have expecting price to get into. So I actually got into a long right here, where this is also a 22 model, right? Because we have this low, have this high, we took that out, and then we broke market structure. Very non-obvious one, but this is definitely a 22 model nonetheless. And this is an opportunity where I would have traded ES, because ES is obviously moving faster than NQ was at that moment. So like you can see NQ is not moving as fast, right? Like this same high over here, like ES took it out decisively. It didn't take it out here on NQ. So I was looking at ES. I was like, okay, yeah, I want to trade ES because it's moving faster. So my entry was here on the top of this breaker, because sometimes when you have this breaker, price does not return back to the fair value gaps. Like if we're closing above the breaker, sometimes we do not return back into the fair value gap. So I got in here right when we closed above this breaker right here, because it shows we're pretty high on the market, and this actually looked cleaner on the 5 minute as well. A lot of fair value gaps on the 1 minute, so this actually looked pretty clean on the 5 minute. So once we closed above it right here on the 5 minute, got in, and then started scaling higher, took about half the trade up here once we got above these highs, and then came back lower. We tapped this, and then we formed another 5 minute 22 model as well, aiming for the London high right here. That could have been another good entry. Stops will be below here, below the breaker. However, 1 to 3. We did get a little higher, but then once we formed an order block right here, I would have set my stop to below this low. And so when we came back in, it would have been a slight loss. Now, in reality, that would have been a very nice trade. But let me tell you something I also took that I was not very proud of. On the 15 minute, we had on that reversal higher, we had a break of market structure right about here, I believe. And and I did enter on this fair value gap, but this candle closed a little too aggressively below here, and I got stopped out. But then you can see on the next candle, we were just tapping this fair value gap here at the bottom. We didn't even close to the consequent encroachment, and then we reversed higher. And so, it may be prudent to maybe take half the trade off, and then if we close below this one, then we can take the rest of it off next time, and then we just reverse higher. But then we still ended up coming lower because of that 4-hour higher time frame SMT, and also the SMT that formed right here when ES got London. So I know this is a lot, but if you take time to really sit down and study what's happening here, like you're learning a lot from what's happening here on a daily basis. But this is really good logging action to understand like why does price move in certain ways, right? So you can see obviously, look, ES was way stronger on that movement higher, and that's why I took ES instead of NQ. But normally ES is lagging behind a little bit. Just want to make sure, was anything else that I missed? I guess we could just finish the 1 minute review on NQ, see if anything happened on the 1 minute in the afternoon. We head lower here, yada yada. Not too much going on. So at this point, I remember I was in this trade on ES, but let's just review NQ here. So we have this gyration here. Once we get below the ORG, fail to make it to the CE. Price starts hanging around this fair value gap for way too long, goes lower, respects this one, and comes back to the equilibrium point, which we bounce off of, right, and break market structure. That could have been a 22 model entry to head for maybe these LRRs right here and a little bit above here, but and also to touch this consequent encroachment. And then maybe you could have entered right here on this 22 model that also has this inverse fair value to the left. That could have been a good stop loss below here on this order block as well, below here, and your entry could be like on this fair value gap right here. You go, and then we go higher. Once you start moving higher like this, I probably would have moved my stop below here just because like I don't want to see us come back down. Like that just shows that we're bearish. Price comes back down, and that would have been a stop out as well. But we would have made money on some other trades on ES as well. And then price really just consolidates all the way until, let's call it 130, where we start falling. We create this bearish flag. No 22 miles in sight yet. This bearish flag until about 250. The macro, we start taking out that bearish flag as well. But remember, this was a nice trade on the 5 minute. This is the bearish flag we're looking at on the 5 minute. Way more obvious 22 model entry than we could have taken. Heading out for the heading for these lows right here. Come lower, take out this high, go lower again. And then we have that 4 p.m. Aftermarket news probably coming from some sort of earnings report. But you can see this was the movement for today. We went over some of the 22 miles that we took. We went over some of the 22 miles that we shouldn't have taken. This has been the daily NQ review and ES review for October 30th.